Okay, testing, testing. 1, 2, 3, testing. 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly on the pants. All right, can we get a confirmation over in the chat room? What Ralph says something, I mean, Forex doctor. I don't know what that means. Anyways, hey, good morning, everybody. How you doing? This is Trade Non-Farm Payrolls Live, month 100. We have got audio, we have got visual. You are a go. Wonderful. This is Trade Non-Farm Payrolls, month 137 in a row. What is that? That's getting pretty close to 12 years I've been doing this webinar. Now put that in perspective. 12 years ago, if you opened up a Forex trading account, you didn't get charts. Yeah, that's a long time ago. So I've been doing this webinar longer than there's been webinars. And so thank you, FX Street, for hosting me for all these years. My first presentations that I used to do at FX Street were like chat rooms, live chat rooms. There was no video, there was no audio, because it hadn't been invented yet. So anyways, so good to have you. Friday, September 1st, 2017. Great trading month coming up. September's a great one. We got a lot of central banking policy to go through. Very, very, very good. This September can be or should be the best trading month of your year. Yeah, Ryan says, imagine where the industry will be in 12 years. You know, and obviously I've seen it grow minute by minute, candle by candle. I've been doing this full time forever now. And the markets have changed a lot. When I first started trading, the market was very thin, therefore it gapped a lot. I mean, a lot. And then you would have things like non-farm payrolls, for example. What it does now is it jumps 50 pips and stops, right? Even 10 years ago, NFP, the number would come out, and the market would jump 300 pips. And then drop 400 pips, and then rise 300 pips again, and then drop 200 pips. And all in the first hour. There were also drops. So anyways, let's see what happens. Connection successful. Yeah, so, there were times in my early career where I remember, I think it was the USD yen broke 115 and I cheered. I'm like, yeah. And then I figured that was a key level of support so that it would fall further. Well, it did fall further, like hundreds of pips. And so I remember clicking out, and in the matter of the 5 minutes it took me to get out of the trade, the market had dropped 200 or 300 pips and then come back 200 or 300 pips, and I only made 600 pips. So anyways, this was a long time ago. Also, how about this? If some of you guys like to trade oil, and we'll follow oil today. There was a time in my life where I would trade oil every single day, but only at the oil close. And I would make $2 or $3 in the last 2 minutes. That's more than a whole day now. In the last 2 minutes, and the market would be doing this, and I'd say, sell, and I'd hold on my breath, and in the 3 or 4 seconds that it took to get out of the trade, the trade could drop $1 or jump $1 and help or hurt me. in the 3 or 4 or 5 seconds. Now that's like a week's worth of trading. $2 or $3 is a lot. So you can imagine the days when $3 or $4 on crude oil and WTI was seconds, not days. So anyway, it's good to be here. The big difference, by the way, the reason it's easier to trade now, or let's say less volatile, is the markets are very mature, very liquid, very deep, much different than before. Forex traders used to be seen as, you know, cowboys out on the fringe. Now it's very mainstream, very so for every bull there's a bear. So the NFP now jumps 50 pips and stops. And the market just stabilizes on the new information. So great, which means I think there's less downside. There's less luck involved than there used to be, which is good. You don't want luck because most of the time luck is going to be bad, not good. All right, so anyways, trading non-farm payrolls 137 at FX Street. Very, very, very cool. So once again, thank you, FX Street, for hosting for 12 years. I mean, how many hours is that? Does anybody have a calculator? Obviously, I'm not a genius. Some of you guys have already figured it out, but let's try it. Clear, 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 clear. 137 events times 3 hours each. 411 hours. That's almost, what, 3 months worth of full-time job just doing this webinar. So that's pretty cool. All right, so central banking stuff coming up in September. We want to watch jobs. Jobs have been, did I mess it up? 137 times 3? Yours is off, but anyways, yeah. Oh yeah, so jobs are important. There's no doubt. However, we're at full employment already. ADP came out great on Wednesday. And if you look at some of the other subcomponent stuff, most of it, and FX Street does a good job of posting that information for us now. I have it somewhere, I believe. The trend seems to be good. The numbers seem to be good. We're at full employment now. It's not like we're desperate for jobs like we used to be. Remember, like 3, 4, 5 years ago? Right? So what we're actually looking for now is wage increases, as Ryan says in the chat room. By the way, if you're on YouTube, you can watch it on YouTube. That's fine. Or you can watch it on FX Street. That's fine. But there's also a chat room where, so I can see over here, and I guess you can see on the screen right here, there's a chat room for you to communicate with me. Okay. So anyways, we're looking at wage growth. Wage growth can lead to spending. Spending can lead to things like new orders. New orders could lead to factory utilization and capacity data improvements. But it also leads to price pressures. Because at some point you can't produce the products fast enough, there's lots of demand, and prices start to rise, and that's inflation, and that's kind of what we're looking for. For example, what did we get out of the Eurozone just the other day? 1.3? I mean, the Europeans were stuck in the mud, huh? So there's some nice improvements there. So anyways, to come out with your model, you should track various things. Now, I wrote an article, I don't know, 2 or 3 years ago, And then since then, FX Street has really expanded that and put even much more detail into its beautiful report. I'm assuming you guys have already read the analysis, but anyways, this is a nice little thing to capture. We're looking at challenger cuts, initial jobless claims, all this kind of stuff. Let me zoom in a little bit. So ADP positive, Conference Board Consumer Confidence Index and all that kind of stuff positive, University Admission Consumer Confidence positive, ISM PMI, nah. So what is going on here? ISM's Employment Index registered 55.2, a decrease, yeah, okay, a decrease from 57, sure, 55 is still a really nice number. The service industry also off a little bit. Canary in the coal mine, or is it just summer doldrums? We're gonna find that out at 10 o'clock today. I think we have services today, don't we? Right? Don't we? Yeah? I think so. So unfortunately, that makes it difficult for our model because we get the data after the fact. But typically in this model, if you can include ISM services, and in particular the employment subcomponent, then you could use that to say, like, let's say ISM services was on Thursday and it was good. Then you could say, well, based on the employment subcomponent of ISM non-manufacturing data, NFP will come out good, not bad. Right? So anyways, jobless claims, fine, or that's continuing. Initial. Okay. Challenger job report, that has to do with companies laying off, I think more than 100 people at one time. Okay? Like if you lose your job, that's fine. It's not going to get recorded here. But if there's a mass layoff, a company lays off 300 workers, they're going to calculate it here. And that's by Challenger, Christmas, and Gray that produces that. And so a big number is not good. So let's take a look at this. This report, and by the way, I think it came out, what, yesterday or Wednesday maybe? It's free information. I mean, you guys should already know all of this. The report confirmed the same hints as ISM. Wow, this report confirmed the same hints of. All right, I think we have an awkward Spanish to English translation here. This report confirmed the same hints the ISM is providing with an increase. All right, so anyways, 33,000, last month was 28. 33 is actually not that bad. Fine, great, 33. So what you do is, what I often do is I take that and I chop that off my expectation. So for example, the market I think is talking $1.80, right? 180,000. So you could just chop that off and say 150 or 147,000 is your expectation. That's one way that you could do it. Because I find much of the market doesn't use it to calculate, and you know. So anyways. So you should be able to go through this and create your model. So what are we looking at? Labor force participation rate, average hourly earnings, all that kind of stuff. Wonderful. Okay. So we have ISM services. We have non-farm payrolls. Don't we also have like Canadian GDP? I mean, I'm just going from memory from Monday's review. I don't have the calendar in front of me. I guess we should do that. Thank you, moderator. Moderator is providing links to the article on building your NFP model. Oh, I guess I need to do this. So help a brother out here. We have NFP, we have ISM services. Do we have Canadian GDP or not? Or am I wrong? Looks like I might be wrong, huh? Yeah, I guess I'm wrong. Where is this? Yeah, I'm wrong. All right, so no Canadian GDP. NFP, 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 and then at 10, so this is ISM manufacturing. For some reason, I thought it was services. It's not ISM services, according to this. Yeah, so that's less interesting for me. I guess we'll have to cover it. Okay, so anyways, it's CAD, yeah, which, you know, for some reason I thought it was GDP. That's not that interesting. All right, but what's not on the calendar that is important today as a currency trader? There's something you don't see here. There's something you don't see here. And if you're a client at tradersway.com, you already know this because I've been prepping you. By the way, visit tradersway.com, open up an account, open up a demo, check us out. Give me an opportunity to earn your loyalty and respect, okay? I provide webinars every single day for clients. Yeah, only an hour and 45 minutes. Anybody? Anybody? What's not on this calendar that we should be potentially trading today? This. USD Mexican Peso. So, my spidey senses are tingling, and I believe this has the potential of falling today, this pair. The Mexican Peso repatriation trade that I do monthly. Okay? So we got to pay attention to this. But like I said, there's only one plan. We just don't know if this one plan will work. The only plan there is get short. Okay? That's it. There's no other. So you're either shorting this right now or recently, or I don't know what you're waiting for. You're either getting short today or you're not getting short today. There's no buying. It's not even part of the plan. Okay? So we'll have to pay attention to this. It kind of looks like we're already starting. Okay? So again, well, GM says, well, with dollar strength, we don't know anything about that. Okay? I have some inside information. There's a trade going through today. A $2.3 billion trade is going today. So, is that enough to move the strong USD? I don't know. All I know is 2.3 billion is going to be exchanged from US dollars into Mexican peso. So maybe it falls, maybe it doesn't. We don't know, but I ain't buying. There's no way no way today I could possibly buy this. But maybe you should be getting short like right this second. And then when the banks open, 839, maybe this thing drops like a ton of bricks with 2 hammers on top. Just saying. So that's a preview. So let me remind you that trading's risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I like to have 2 disclaimers. So let's go back to the one I did 12 years ago. Welcome to Trade Non-Farm Payrolls Live. Let me remind you that the purpose of this presentation is education. This is not an alert service. I'm not here to make trade recommendations. I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky business and not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Isn't that gorgeous? That disclaimer is almost like an old friend or a child you lost in the woods for 3 nights, and then finally you found them. You're like, oh my God. Funny thing is I could say it again word for word for word. Anyways, this goes back to my book, El Forexo, El Credo, El Profitable O. And this goes to a credo. And it's funny because I had a business planning retreat with myself early on in my trading career, just to kind of set the stage. I was a venture capitalist. I was just promoted to vice president of the firm. We had 300 employees. I had a beautiful office and a skyscraper, killer view of the San Francisco Bay and the Bay Bridge and all that kind of stuff. Loving life, living large, doing what I like to do. So I quit and became a full-time Forex trader. Yeah, good move. Good move, yeah. Good times. Let me tell you that is a giant leap of faith, isn't it? But I had been trading for several years on a demo account. And I got to the point where I was making significantly more trading than doing my job. But then I was doing so much time trading, I was becoming mediocre at my job. So then I focused more on my job, and then I became mediocre at trading. Finally, I had to choose. Sophie's choice, right? So I quit. Gave up my salary, gave up my health benefits. I gave up my office. But I gave up my commute too, huh? Nothing like paying $400 or $500 a month in parking. Right? So anyways, so I started trading on my own, 10 o'clock at night to 10 o'clock in the morning. And everything was going well for a while. And then I started not doing so well for a while. And I realized I needed a break, right? So I went on a business planning trip with myself, and I created agendas and invited myself. I did board meetings. I had people conference call into my board meeting with myself so they could witness it, and I took notes during my meetings with myself. Crazy, right? And one of the things I ended up doing with myself was I came up sort of like a light rules of engagement, but I wanted it almost like, I had this vision where I wanted a mission statement on my wall, and then I wanted an operational direction statement, and then I wanted like a credo. And I thought, you know, like inspirational notes, I'd have posters on my wall. So when I walk into my trading office, I could say, oh, there's my credo, and I could realign my sense. So I broke it down through much thought and probably much whiskey. And I came up with the credo. And that was capital preservation. And this comes from like, what is my number one goal? Every single day, every single trade. What is my number one goal? And that was not to lose money. Right? I mean, before anything else. Because imagine this. If you lost 50% of your money, you have to double your account to get back to break even. 100% return. That's not that easy, especially if you just lost 50%. If you're that bad and you just lost 50% of your account, then how could you possibly then suddenly double it, right? Good luck. So I realized back then, look, when I sit down at my computer, my number one goal is to not lose money. Whatever I do, whatever I trade, I better have a good plan. I better have a good strategy. I better have some good upside. I better be able to manage the risk, because the number one goal is not to lose money. Money is my product. Money is my service. I have to have money as a currency trader. A currency trader without currency, I think, is just an alcoholic, right? Not really sure. So that's what I wanted. Capital preservation. The next step is, once I do trade, the goal is eke a living. Chip away, right? Like water over stone. You just slowly accumulate. So my goal wasn't to make a lot of money. If I'm in a trade and then I was able to move my stop closer to break even or to break even, that's great, fine. But then I studied my results. I studied my history actually quite diligently on spreadsheets and everything. And I started to figure a couple of things out. And one of the things I figured out is if I made 15 pips, I almost always made 30 to 45 pips. And I also found that a lot of my trades I could get to 10 pips, and just based out of luck, you could watch a trade go up 10 pips and then drop 30 and take you out. Okay, so I noticed that, where I could just kind of get in. And, you know, bear in mind, back then, I was probably getting in late or early, probably late, if anything, right? So I could get in a good bullish trend, buy it, and go up 10 pips, and then hit the resistance and drop. And so anyways, I at least recognized that I can get lucky, make 10 pips, and it didn't mean anything. But if I got 15 pips, I probably will make 30 to 45 pips. So this was just my own analysis, right? And this was a long time ago. This was 15 years ago now. So I created this idea of minimal acceptable performance, because you got to remember, as an entrepreneur and stuff, in my companies that I ran before Forex, and I ran a few, you know, I was in like newspapers and magazines and all that kind of stuff, like I was in Forex, or am in Forex, but I was in other industries and had that same sort of visibility back then. I was in the 1999 Inc. magazine's Hot Startups issue, or the National Post, which is the national newspaper for Canada, something like 30 or 40 different articles. So anyway, so going back to my entrepreneurial days, I obviously had to run a lot of sales teams and stuff. And you have a minimal acceptable performance in sales, right? Because you know it's numbers, dials per day, contracts per day, presentations per day, all that kind of stuff, right? And from that, you can extrapolate how many sales you're likely to make. Well, I thought, well, I kind of need a minimal acceptable performance for my trading. And I knew if I could get to 15, I could probably get to 30 to 45. And these were like 15-minute based charts, New York session. You know, if I could make 30 to 50 pips, that was a good 4-hour move, right? So I created this minimal acceptable performance. What it meant for me is every trade I took had to easily be worth 15 pips. Okay? And if I wasn't absolutely convinced I'd make 15 pips on that trade, then I wouldn't take the trade, because of the first part of the credo. capital preservation. So I should, when I take a trade, I should be dumbfounded that I didn't make 30 to 45 pips. You see what I mean? Like 15 pips should be with your eyes closed. And I know if I got that, then I'm going to hit my goal, my target. And therefore, I can start managing my stops based on this data from my own trading history. You see where I went from that? So then once I was up, let's say 20 pips or so, I can start locking in profit because I knew if I got past 15, I'm probably going to get 45. Okay? But I'll lock in the 15 so that if the trade collapses, I'm very, very disappointed that I only made 15 pips. Find another trade. Okay? But once I got my stop locked, ideally now, I mean, it depends on where you are in the cycle of these moves, but then that's where I want my winners to run. I want the full 45 pips, and maybe, just maybe, I could not even take profit and let those run. Maybe I can get 100 pips, 150 pips, depending on where I am in the cycle. But the whole point is once I have no risk and I have a small profit locked in, then you let it run and make as many pips as you can, but not until risk has been removed. And that was the net result of my business planning retreat with myself. Like I said, I documented and stuff, took notes on the letterhead. Okay, and a lot of other things came out of that business planning retreat. It's probably one of the best things I've ever done. But I realized that in all the times that I was a success in the past, in other businesses, doing other business models and stuff, I always, always, always had a detailed business plan. Always. Right? And then the other thing I always had was, wait, that ain't going to work. I can't see that now. I always surrounded myself with successful people. So I hired good people. I hired great people. I hired the best people. And that was the other success. So the other thing that came out, or one of the other things that came out was surround myself with successful people, which I ended up doing. Okay, take a screenshot. Take a picture to last longer. Okay. If you haven't done it already, it means you don't know how to take a screenshot. So welcome to 21st century. So anyways, just a little brief. I use 2 moving averages to identify the market. According to this chart, do you think the market's bullish or bearish? Bearish. And I look at it technically, meaning I use 2 moving averages. The red one's 21 EMA. The blue one is a 55 EMA. If the 21's below the 55, we're bearish. If the 21 is above the 55, we're bullish. But also the angle and separation between the two provides almost like a relative strength, if you will, where if it's widening and expanding, otherwise known as diverging, then not only are we bearish, but we're bearish and aggressive. If the 2 moving averages are convergent, right, then we're bearish, but conservatively bearish. Okay? And so you could use a moving average convergence divergence indicator, or you can use your moving averages. Same thing. Okay? So this represents the market. So if you ask me, hey, Wayne, what were the markets like today? I'd say bearish. It's not an opinion. Or I could say it started out bearish, but, you know, we ended a lot more conservatively bearish, you know, whatever. So for price, I like to use the 5 and the 8. Same idea. Cross down, bearish. Cross up, at least not bearish anymore. Okay? Because remember, even though this crosses up, it doesn't make you bullish because the market's still bearish. How could you be bullish in a bearish market? What's wrong with you? There's something seriously wrong with you if you're a bull in a bearish market. You're taking on twice the risk for half the potential reward. But you know what? Amateurs do it all the time. That green line, that's the trend. Actually, what I call it is the fair market value. The closer we are to that green, the more neutral the market is. The farther away from that green line, the more mispriced the market. And at some point, it will snap back. Oh, it will snap back. Probably won't come into play today because we're not really making long-term trades today, but nonetheless, important information. Volley bands, they tell you if people are trading or not. So for example, you see how tight the bands are? We call this a tunnel. What that tells me is nobody's trading. So if there's an amateur loading the boat and selling the farm, they're sorely mistaken because they're the only ones in the market. And they're not big enough to move the market. And there's those oscillators. This is a MACD. This is a stochastics. The MACD I slow down so it represents overbought and oversold conditions for the market. Market. Overbought or oversold conditions for the market. The oscillator down at the bottom, the stochastic oscillator, is sped up and represents overbought and oversold conditions for price. The differentiation here is price can rise in a falling market. What I prefer to do is sell in a falling market. So I want to find, first of all, is the market bullish or bearish? If it's bearish, boom, then I'm already set. It's bearish, I'm a bull, I want to sell, but I want to sell high. I want to sell when price is overbought and starting to fall. I want to sell in a falling market. Therefore, when is price overbought? And I'll look for a scenario like this, where price is overbought, but I'm in a bearish market, and then I sell. Cool, right? You should have known that 15 years ago, bro. You're welcome. That's what a chart will look like. Easy. Except I'll look on 3 or 4 different time frames as well. So we'll come back to the new setup in a bit. What time is it? 8:10. It's weird. I feel hungry. I feel like I need new coffee. Hey, look, Peso strong. You know what's funny? If you don't hang with me, here's what's funny. We set this trade up on Monday, knowing that we wouldn't have a chance to take it until Friday. We could just talk about it like, oh yeah, Friday. We'll sell this pair on Friday. So cool. So I'm hungry, man. I had beef stew. I've had a banana, but maybe it's my coffee's almost out. I don't know. So we'll do a little more. Then I'll set you up on the trade. Then I don't know. Maybe I'll get another banana or granola bar or something. Weird. Okay. This is our friend Gold. Now, this line here, you might say I drew this because of the monthly pivot. The only problem is the monthly pivot was created today. I had this orange line drawn several days ago. Gorgeous! Yeah, you're probably right, Peter. So, you got to ask yourself one question. Are you feeling lucky, right? Are you a bear on gold? If so, you have a monthly swing setting up right now. Maybe not right this second. The hourly chart says it's going to try to break it one more time and drop. If you're a bull, you're out of position. And you should have bought it at support 2 days ago. Where were you 2 days ago? What were you doing? You're a bull, you're at support, but you didn't buy. I don't know what kind of bull you are. What kind of bull are you? I don't see horns, son, so what are you? Oops. Let me get rid of that. There we go. Okay, so if you are a bear, maybe you look for a drop. I'm not saying you should be a bear. Okay, a bear is going to look at that and, okay, looking at the double top. Too early to take the top unless you shorted way up here. A bull is going to want to buy the 21. The 21 is a dynamic level of support, but only on this time frame. Okay, so a bear is going to assume the bulls are going to buy it up into here. We just don't know how many bulls are left. We might have lost, or probably lost, a lot of bulls on the double top. Therefore, this is the next move that a bear is going to assume. In fact, if I were to really draw it out, it's going to hit the 55, it's going to be flat, it's going to come into this roll reversal, and then it's going to drop to the 200. Maybe. Don't want to sound too certain, but that's what I would think if I were me, if I were a bear. Okay, I'm not saying you should be a bear. I'm saying this is a bullish entry. It's not a good one. It is one. It's just not a good one. It makes me wonder what people. I mean, I don't know. I guess some people are very slow, right? So, anyways, I think that's just as possible on the 4 hour. It really depends on how the news comes out, right? Oh, I remember fibbing this. Yeah, this was like a 50% fib and the psychological level of 1300. I mean, it's just like, wow, you were a bull and you didn't buy that? Like, you have to question your bullhood, your bullish hood. All right, so we don't have a lot of time, and I want a little reload coffee snack time. So why don't we go back to the presentation, to the little Prezi, and let me tell you how we're going to scalp this. Now, if you've read the article, and I'm not sure if it's in the new article or not, I have given FX Street readers 2 trading setups for this event. One is a new scalp, a high volatility event-driven strategy, and the other one's a counter trend trade. So this is going to be the high volatility event-driven strategy. Okay. Boom. All right. So what's going to happen is the news will come out, and we're going to watch a 1-minute chart. I don't know what I'll pick, euro, dollar, pound, dollar, whatever. I don't see it my job to put you into a trade. So you find whatever you want to trade, whatever you watch all the time, whatever currency pair you feel most familiar with. You should know which currency pair you're bullish on, which currency pair you're bearish on. Or how about this? if the market comes out bullish for the US dollar, what are you already bearish on? So if you plan on buying dollar, let's say, how about this? How about this? Let's make it easy. How about if NFP comes out hot and that makes the Fed want to raise interest rates, which makes the US dollar strong, then maybe you say to yourself, I want to sell pound dollar. But if the data comes out weak and it shows that the Fed may not be able to raise interest rates this year, then you want to sell dollar and maybe you want to buy euro dollar up. I'm not saying those are the right things, but I'm saying you should think about that now. If it comes out bullish for the dollar, what are you going to do? If then statement. If it comes out bearish for the dollar, then what are you going to do? So you might want to have two pairs open. Pound dollar, euro dollar, hot to go, HOTTOGO, depending on how the news releases. You got it? All right. So anyways, we're going to watch the 1 minute chart. And if the candles come out green, that's just how the market interprets the news. I don't know why. I don't even care. Okay? If we see a series of green candles, 1, 2, 3 minute, 1, 2, or 3 minutes in a row, you see green, we're simply bullish. That's it. We're not going to go against the market. The market interprets the news as bullish. Great. Then we're a bull. But we can't buy high. A conservative, disciplined trader does not buy green candles. A conservative, disciplined trader buys red candles when the red candles have retraced back to support. How do you define support, you ask? That's your job, bro. So I look at fib retracements and I look at roll reversals using price action, for example. Okay? So I look at this line in the sand and I identify it. Maybe I don't draw it, but I pay attention to it. Okay? And I say, okay, if we can get above that line, we're going to get paid today. If we retrace back to that line and it fails, I want to bail. If it fails, I bail, right? So I look at that, my line in the sand, and then I draw a Fibonacci retracement, assuming that the price is going to go back up. I want to know where the 382, 50%, 618 Fibonacci numbers are, and I'm going to measure from the highest 1 minute candle post-news to the pre-news candle. Pre-news, right? So this low to that high, and I'm assuming it's going to come back to this the sweet spot, if you will. And then I'm going to look for an opportunity to buy. Now in this case, it fell a little bit farther than I like. It fell to a 786. Still have to make a judgment call here, right? Now the thing is, if you buy it at the 786, your stop is just below here and you're risking 15 pips, 12 pips. I mean, fine, take the shot, drop a stop, let it run, okay? So anyways, you can see it dropped here, 786 held once, 786 held twice, 786 held the third time. So in this case, you probably could go long while you're in the sweet spot. Your entry, because of the spread, let's say, is at 148.75. Your stop is at 148.50, so your 25 pip stop, and you're done. You either make money or you lose money. It's like a binary trade now. Okay? Now, a few minutes later, typically in this scenario, in 4 minutes, you should be break even, meaning your trade's already profitable. If it's not, you've lost the volatility, and the longer you sit there not making money, the less likely you're going to make money. So in a scenario like this, like you longed on these candles, and then 1, 2, 3, 4 minutes later, you're profitable. I mean, you're only like 5 pips profitable, but at least you can move your stop from down here a little closer and remove some of the risk. And by the time you get to the line in the sand, your stop should already be at break even. Hero or zero. You make money or you don't make money, but you certainly don't want to be in a situation where you lose. Right? And that's when you'd probably jam your stop. You got 3 good candles in a row. You know it's going to go up and up and up. But imagine it went up and up and up, hit your line in the sand, bearish engulfing candle. That's why you want to be at break even at that point, because that could be a serious top and it can come crashing around the other way. Right? And in this case, ta-da! you're making money. So that's the high volatility event-driven strategy. Now I am going to, let's see, I'm going to start tradethenews.com so we can get the data fast. And then I'm going to go get a coffee. You all right with that? All y'all? So let's give this a test. Let me know if you can hear the sound.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configuration are working properly, and you are now ready to listen to our other voice channels.
You got that? Great. So I'm going to take like a 3-minute break, 2.5-minute break, 1.382. And then we'll be back for Trade the News. Would you please go to tradersway.com and open up a demo account? Would you please? Give me a chance. Come on, put your diamonds in the sky. Give me a chance to earn your loyalty and respect. Costs you nothing, takes 30 seconds. Get to check out our back office, download MT4, check out our spreads, execution speed, chat with our support staff. They're kind-hearted, wonderful, beautiful people that care about you. Honestly. When I have meetings with them, we care about you. They want you to succeed. Because then you end up trading for years and years and years and years and years, and that's just a better business model. So swing on by. All right, cool. I'll be back in 2 minutes. Let me reload all this because there's hours left of this webinar. Be back in a flash, all right? Thank you. Alrighty. Andale. G, lay. Alrighty. Hoo-ha. Marina's going straight for the peso. How about gold? Yeah, how about gold? We already did gold. We'll come back to that. I think just because it's so popular, let's do euro dollar, not pound Noki. Beautiful. Look at the top to the bottom. My gourd. Look at that. Sick. That's just sick. If you've taken my swing trading course, you're just like, ha, free money. So the market's thinking $1.80, huh? Cool. What is it, about 90 seconds? Remember, if you're new to this, don't trade real money. It's also a scalp. Remind yourself that. You don't fall in love with this. There's no time for committee meetings or group hugs. You should have a fast broker as well. I've tested Trader's Way through third-party systems. We're much, much faster than most. Especially the big boys. They're slow.
In 1 minute to the economic data, non-farm payrolls expected at 180,000.
$1.80.
Unemployment rate expected at 4.3%. Wages expected to grow 0.2% in average hourly earnings and up 2.6% year over year. Weekly hours seen at 34.5.
So, by the way, I want to remind you, it's the first of the month. Do you think they really went through all the data this morning to come out with the NFP number? So they are going to have huge revisions next month because they're just going to get it wrong because all they did was use a bunch of fuzzy logic math.
20 seconds, 20 seconds.
I wouldn't be shocked if it came out 147. Namaste.
10 seconds. You're looking for 180,000 in the non-farm payrolls. $156, a miss. 156. Unemployment rate rising to 4.4%. That's 1/10 above expectations. Average hourly earnings 0.1% below, and a year-over-year 2.5% also below. Average weekly hours 34.4. That's down for average weekly hours. So again, a pretty weak report all the way around. The miss on the non-farm payrolls of 156. Historically, that's where we've been below for the month of August, but 4.4%, a rise in the unemployment rate. Average hourly earnings missed on both the year-over-year and month-over-month, and the average weekly hours were down to 34.4. In terms of revision, the back month was revised lower, 189,000 non-farm payrolls, and the average hourly earnings was also revised lower to 0.1% from 0.3%. The euro moving out to a fresh high, taking the cue from the wages data, 119.63. U.S. bond markets moving lower. Bond markets moving higher, yields moving lower. The 10-year yield dropping back to 2.1%. The 2-10-year spread holding around 80 basis points. Gold futures also getting a bid on the weaker than expected jobs report.
There you go.
And a recap, 156 was below expectations. We did see it move higher in the unemployment rate, and the wage data came in short of expectations. We also saw a back month revision lower for both payrolls and last month's average hourly earnings.
So it goes to show the industry's models are just not that accurate. I mean, I'm not perfectly on, but...
And again, that move lower in average weekly hours, 1/10 of a percent, equates to about 250,000 jobs.
Debt ratio, positive 103,000 there.
So we're coming up to resistance. So remember, you can't buy high. So we're hoping for a retracement, or you're going to set up the counter trend trade, guys. And a counter trend trade would be to sell into this zone here and see if you can get it.
Overall reaction, the equity futures has been somewhat muted, 24.75 holding in the S&P minis as bond markets rally. Initially, and the dollar sells off in the wake of the August jobs report.
Okay, let's take a look. So here's the trade that Traders Way clients and I set up on Monday. We said it would fall today. Yeah, you're welcome. Coolio.
Take a look at the Fed Fund futures contracts. Overall, not seeing too much movement, up very slightly in the December 2017 and January 2017, 99.77, in holding in less than a 50% chance of that third rate hike this year in December.
Look at gold. It broke through the resistance. Holy smokes. Gold. Gold. Gorgeous. Take a look at the yen pairs. This is just not setting up quickly enough for me. Yen pairs.
U.S. equity markets continuing to bid 124.78, testing the two-star resistance level off of yesterday's trade.
No, Sam, I'm not God, but I'd like to be emperor. So my CAD yen, I promised people yesterday if it made another higher high, I would lock in profit. I think I'm up 300 pips now, so I will move my stop. 100 pips. I guess I'll move it 150 pips. I can't see that. That's 200 pips. Can't quite see it. Maybe my eyes are. That's 200 pips, isn't it? I can't see. No, 120, 130. All right, so yeah, I'm going to go back to just locking in 100 pips. Marina, actually, I think what you mean is it's down 920 pips. It's just, but yeah, 92. Coolio. So a nice one for commodities. So I think I'm up, like I said, on the CAD yen, I'm up 300 pips, but my target is 1,400.
Now we're seeing reaction to today's job number. Janice's Bill Gross calling this a weak jobs report.
So here's my Aussie yen. Nobody knows. So again, if you're a Traders Way client, on Monday we were talking about Aussie coming back and going bullish. We are actually looking for oil rising from 45 to 55. That might not be setting up. We'll have to go back and check. So like I said, if you want to hang with me
Dollar CAD down 115 pips now. The decline extending there for dollar CAD. We have moved below the prior 2017 lows in dollar CAD. Looking at levels not seen since 2015 there in dollar CAD.
So if you like what we're doing today and you want to do it every day, just open an account at tradersway.com, completely free. Cool. So lots of interesting things going on, except we haven't got a pullback yet. It's all right, brother. How about the counter trend trade? Not set up either. So this is, be patient. remind yourself, your plan is to buy in the sweet spot or sell at resistance. Buy at support or sell at resistance. If it turns green here, doesn't matter to me, it's dead. I don't care if it goes up here, I ain't going to buy it. I can only buy down here. And ideally down at the 618 pivot point roll reversal area. So actually what it looks like, since we're losing the volatility, it looks like it should do this, in fact. Okay? So now we've made a 3A2. You have permission to think about maybe buying if you're a bull. See, up here we didn't have it. Now you're on the 3A2. Okay? If you're an aggressive bull, you buy the 3A2. If you're a conservative bull, you buy a little bit lower. Oh, Joseph says you're a Trader's Way customer. How about log into your back office, and at the top of your back office, there's a button that says like live webinars. Every day, 7:30 in the morning, Monday through Friday, except the first Friday of the month I'm here. Okay? Got it, Joseph? Okay. One green candle. By the way, your stop's going to be the same no matter where you place it. Just below here. So whether it's 382 or 618, your stop's always the same. This is how I had it the first time, if you remember. Nobody knows. Eastern time zone, of course. New York. It's up to you, New York, New York. So if it collapses down and we get red candles, it's still down here is the buy zone. Okay.
Latest report on the ECB. ECB is said to see a change quantitative easing plan not fully ready until December, and they want extreme prudence on communication policy. So once again, another source ECB report saying that they are going to be very prudent in the way they announce this unwind from QE. This latest report saying that the full plan won't be out until December.
ECB's freaking out that the euro's
next
hot.
week.
All right, this is euro. This is the ECB's response to the euro being too strong. They just killed it.
The euro has come all the way back off the post-jobs report high, 119.16 after running up to 119.79.
They just killed it. That's the end of that. Oops. ECB just killed it, guys.
Again, the current thinking among analysts is that the ECB will discuss it at next week's meeting with a decision in October. This latest press report saying that the chance that the plan won't be fully prepared until the end of the year, December, as they seek to exercise prudence on the communication and language of the policy.
They killed it. Bloody ECB. Aussie holding firm. And now you got to like, are you trading the bad NFP or are you trading the ECB jumping in and killing the euro? Or maybe not killing the euro. We don't know, right? So also remember, most of the market doesn't know what Trade the News just released. They're going to learn about it in the next few minutes, and then the next few minutes, and then the next few minutes. So I'm going to trade the ECB news and see what happens. Okay, so you notice I have a stop above and I have a stop below, or a target below. So here, this is what I just did. We had the news, the candle retraced 50%, so I sold, and you can see actually I'm a little close here. Was it on Bloomberg? Thank you. Thank you, Marina. So that's good for me. As more and more people learn that we're not trading NFP anymore, we're trading ECB, then that's cool. But you might be better off on something else like yens or Swissier maybe. Right? What do you think? Do you think it's going to set up like this now? ECB trying to kill the euro strength? Euro dollar, Stephen. The trade we were watching through the news. How about like I don't know if you're trading like Euro CAD or something. That could be interesting as well, huh? You might want to look, let's take a look at like Euro Yen. All this bad news is probably very...
We have seen a bit of reversal in the bond market. The 10-year now in negative territory, the 30-year down 10 ticks. We have seen bond prices hold fairly steady throughout the week as equity valuations have increased leading into the jobs data. And after this week jobs data, the move lower in yields has reversed. And we're seeing some selling, particularly at the long end of the curve. Again, Fed fund futures contracts are a little changed, but they are bid up slightly. For now, totally unchanged for the December and January contract.
You see what I'm doing? In this case, dollar's already weak, so this is probably a better trade, although it gave the same 50% retracement. So again, here's another opportunity to dump the euro on the back of the ECB news. This is verbal intervention, is what it's called, guys. ECB just came out and said, blah, 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 blah. Don't buy the euro, don't buy the euro. Well, they're doing it because of NFP. So they see that it's going to weaken the dollar, which is going to strengthen the euro. And strengthening the euro kills everything the ECB is doing. So now ECB comes in and verbally intervenes and says, don't buy the euro, don't buy the euro. Well, it's not a little bit. It's flat out jawboning. So it's cool. I don't care as long as I make money. I don't really care. So I'm almost got my little scalp here. So I'm going to do something different. I don't want the 25 pips. Okay? I don't want the 25 pips, although I got a lot going on here. What is all this stuff? Gee whiz. Oh, I see the extension. Hang on, I got something to think about. No. Ah! Made 25 pips. Crap, I was trying to move it. Couldn't figure out where. Gee whiz. Boo. I was trying to figure out where to move my stop, and then I got all this support here, and then... So, anyways, I apologize. I counter trend traded and made 25 pips. Sorry. Shoot. Yeah, Ryan says anyone studying the ECB would see this coming. You know, the one I remember the most is the euro was way overvalued, and there was a problem. Or was it the other way around? The euro was super weak. I don't remember the case. I think it was weak. Okay, the euro was super weak. This was many years ago, and Jean-Claude Trichet's deputy went to China, had closed-door meetings, no press conferences, basically under the radar stuff. And 2 days later, the market reversed. And it was like they walked in there and they're like, you gotta, I forget what it was, buy the euro or sell the euro. I can't remember which case it was. But all of a sudden, boom, the whole market changed. And you just know it was China helping out the Europeans, like a bailout, essentially.
We're about 10 minutes down the open pit trading in energy markets. WTI crude futures down 25 cents at 46.97. Natural gas down 1%. And we continue to see the give back in gasoline futures after running up about 12% in the front month contract following for the month of August. We're down about 2.5%, 173.50 currently.
We're approaching the first sell zone for pound dollar.
And overall, the reversal from the initial post-jobs report moves are continuing, with U.S. yields inching higher. The long bond at the lows down 12 ticks, 119.08 in the euro, trading at levels we haven't seen since before the jobs report there in the euro.
If you're a bear, this is where you're going to look for sells.
Gold futures also reversing course after running up to 1334.50. We backed off about $8 to 1327.
Everything in reversing except Aussie yen, which I'm long. Sweet. Okay, this goes back to Wednesday's trade that we did at Trader's Way. We were looking for a double bottom. I thought maybe it'd go down closer to 45, but it only went to, what, 46. But it double bottomed. So then the plan was let it break, make a higher high. And if it can make the higher high, then go back to the roll reversal.
The UK Brexit minister is currently in Washington addressing the Chamber of Commerce at this time. Brexit minister. And we just saw the wrap up of the third round of negotiations, face-to-face negotiations yesterday in Europe.
Okay. So at this point, your stop would be jammed and you're hoping for the best. There's a retracement going on now, but again, hopefully you can survive. You know, for example, this may act as support and you go long here. We'll call this a three-wave correction in a bullish move. But I'm not an Elliott wave guy, so don't get up in my junk about that. Cool, you guys having fun? This is a pretty exciting NFP. Looks like maybe I did the right thing taking profit, huh? Yeah, maybe on the super short term. It's still. Is that Ryan? Long at 47? Okay, what do you guys want to do with USD CAD? Are you going to go a second chance? Or are you worried that people dumping the euro will buy back the dollar? Well, in that case, what is it that you're bearish on? I mean, this is where you start thinking maybe euro CAD instead of USD CAD, right? Is that what you're thinking? Oops. We got lots of pivots above us. You got to find resistance. Remember, you're a seller at resistance. 15-minute 5 EMA might be good. Man, there's lots of little pivots in there. You also have to match up your entry with your aggressive level. Okay, so how are you going to play it? Are you going to kick it off this? Kick it over here, baby pop. Let all the fly skimmers feel the beat.
Latest survey on OPEC output fell in August as Libyan supply was disrupted by those protests. The survey here on OPEC.
So let me draw this in case you're not entirely certain what we're looking at. Lower low, lower high off of a pivot, lower low, lower high off a pivot maybe, which would project a lower low, which is our weekly target. Okay? So you could throw down an OCO here, stop it there, limit there. It's your call. You gonna do it? Huh? La 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 la, do do do. I think I'll eat my banana. We use tradethenews.com, Samuel. I've been using them for about 14 years, I think. I met them at the 2004 FXCM Traders Expo, I think. So how many years ago was that? 13 years ago? That same day, I'll never forget it. I think I was finished using the restroom. I was washing my hands, and then I wanted a drink of water as I left the bathroom, and there's a little water fountain. So I'm on the water fountain. It's so long ago that next to the water fountain, there's a pay phone. Okay? And I was hanging out with a bunch of other trader friends of mine. So anyways, I'm getting a drink of water, and the guy's on the phone spending something like $7,000 on a trading package. I can't even remember the name, the Forex Made Easy. Like $7,000, right? And he hangs up, and I'm finishing my drink of water. I'm like, did you just buy Forex Made Easy? He's like, yeah,
why? The dollar index now trading back to the level we saw heading into the non-farm.
said, come with me. So we go over to my group of friends that were waiting. I'm like, this guy just bought Forex Made Easy for $7,000, right? And we're like, what? And we just passionately talked to this guy for like an hour and a half, right? Literally. And he went back to the payphone, called them up, and got his money back. Boom, boom, boom. Another Forex soul saved. Right, Alexander. It's called tradethenews.com. So you would go to tradethenews.com and talk to them. I don't work for them. I don't receive money from them. I don't receive kickbacks from them. Yeah. So anyways, it was great. You know, that was, I think, FX Street's first conference they ever attended. So I don't know what year that was, 2004, 2005 maybe? Stefan, on my free time, I'm an exotic dancer. And that's what pays the bills. Yeah, I got a video card problem again. All right, so this one's bailing on us, huh? Strange, and not at the proper pivot. What pivot is this? Can't even see that. What pivot is that? I'm going to change my template here. Template. Pivot clusters. Boom, boom. Yeah, that's what I thought. I don't trust that pivot. All right, so okay, all right. It's still a bear if you want to be a bear. If that's what you want to be. Fred, will I trade the Sunday, Monday holiday thing? Yeah, maybe. I mean, you know, all you have to do is drop your stop. So, yeah. Yeah. To be honest with you, it depends if I'm doing family stuff or not, right? So, this is good. It's moving. Remember, we have it coming down to the pivot. The green zone is a take profit zone, guys. And if you're lucky enough to hit this, you have to take profit or you're just completely undisciplined. So this is a maybe. This is an absolute definitely have to. So since the last non-farm payrolls, I flew to Hong Kong, which was a great experience. It was very interesting trading the Asian session. It was actually pretty good, to be honest with you. I mean, you can get up, let's say, in Hong Kong, get up at, let's say, I don't know, 8 o'clock in the morning. It's fine. 7 o'clock in the morning and trade. And you could trade all day until midnight, which is the London close, the New York lunch. That's not a bad trading day. Because midnight in Hong Kong is 12 noon in the in New York, which is 5 p.m. in London. It's actually a nice trading day. Con says, what? I can't quite see. Hang on. Let me try to move this. Oops. What? Wayne, Jesus, stupid Windows. I really dislike everything Microsoft. All right, Wayne, what was the strategy that made you sell after? Really? Dude, all right. Well, let me. I thought you heard me freak out. And I thought you heard the news. The ECB came out and basically told the entire world to not buy euros. Stefan says, but FX, really? See, what you just told me, Stefan, is that you just don't know how to trade the Asian session, which is fine, but I don't know. What do you mean? I mean, it's just funny. Oh, really? You can't trade the Asian session, huh? All right. What is the, 2/3 of the world going to do then? Oh, how is it expected? We had a bearish engulfing candle, a 50% retracement, with a pivot point act as resistance. So I sold it with a 25-25 OCO. Well, you have Australia and New Zealand, and they wait for Japan and Korea to open, and then after the Korean, Japan, Australia, New Zealand sort of bank open. I mean, there's banks and then there's tradings, but Australia delays their stock market open to coincide with Asia, Japan and Korea, which are large, sophisticated, mature economies. And then about an hour and a half after that, you have the Shanghai Open and Hong Kong, but in there you also have India and like Taiwan, and right? So when you throw down, like just China, think of it. You got Hong Kong, Shenzhen, and Shanghai all trading. How many people are we talking about? Well, market size, right? So anyways, yeah, so don't say things like you can't trade the Asian session. I mean, that's ridiculous. But what you should say is, I don't know how to trade the Asian session, so you need to start learning. Either, get someone to coach you, or open up your charts and spend the next 2 or 3 years trading the Asian session. I like the Asian session because I can say, oh, the market's going to move in 4 minutes. So I'll sit down and I'm like, I'll have 18 minutes to make money. So it'll come out, boom, it'll start moving, make my trade, blah, 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 blah. 18 minutes later, take my profit, or jam my stop, take a walk, and see you in the morning. Or how about like when the pivots open on Sunday night / Monday? You're not trading the Asian session on Mondays? Really? Seriously? Oh my God. Right? Like, wow. Really? So obviously I'm exaggerating for effect. Dude, it's ridiculous to say you can't trade the Asian session. Yeah. Yeah, get involved, man. There we go. See, we got lots of people supporting Asia. Go Asia. So anyways, going back to what I was saying, I lived at the Ritz-Carlton for 2 weeks in Hong Kong and had a fun time and got to enjoy my first typhoon. I'm like, what? There's a typhoon coming? Category 6. And then the day before it arrives, Category 8. And then it runs straight into Hong Kong. Category 10. Woo! My first typhoon. Category 10. Now my room was on the 111th floor, and it started swaying. Wah, wah, like seasick type stuff, right? Like seriously. Wah, wah. So I heard they're shutting down the elevators, and they're like, hey, if you need to evacuate the hotel, you should evacuate now. They're going to shut down the elevators. So people are going for the elevators. Everyone's like, down, 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 down. So what did I do? I got in the elevator. I'm like, up. And I went up to the 118th floor. 118th. The swimming pool. Infinity pool. 118th floor. The highest swimming pool in the world. And the place is empty. Ghost town. And the infinity pool is doing this. And there's waves. And the water on the ladder to climb down in the pool, the water's like dipping way down, like to the third step, and then up and over into the seating area, and then swinging back and dropping down in the pool, and then up and over. And then if you imagine the other side of the infinity pool, it would drop 2 or 3 feet lower, and then up over the side and up against the glass with Victoria Harbor below us, the swimming pool water up against the glass on the 118th floor. So I dive into the pool, and I'm swimming in the current of the pool, sloshing back and forth, and I call my wife and kids. I'm like, check this out. And my daughter's crying. No! My wife is just like this. My son won't even look at the video. I'm like, no, it's cool. Look, I'm on the 118th floor in a class 10 typhoon in an infinity pool with waves. Man, that was a great day. Yeah, awesome. And then in the middle of my trip, which I had no time to plan, in the middle of my trip, I'm talking to a potential client, and he's like, you got to come to India. Or not India, sorry, Dubai. You got to come to Dubai. And I'm like, I'll be there tomorrow. So I flew from Hong Kong to Dubai, and then flew back from Dubai to Hong Kong, and then flew Hong Kong to Korea to Seattle to Atlanta. 40,000 miles in 9 days. Well, what do you think, Big Perm 99? Any thoughts on the Ajucat? All right. So look, let's don't have opinions. So you tell me, what's the inflation rate in Australia right now? Okay, and compare that to what you think they'll raise interest rates to. By the way, this sell is still working, still coming down. Okay. What's the trajectory in the inflation level? Yeah, well, the Ritz-Carlton's, I mean, I'm a gold member, so it's the second home. All right, so is inflation levels rising? Is it falling? What's demand for their exports like? Iron ore, coal, that kind of stuff. And then you look at it and say, are these trends, like for example, if you have some inflation, but demand is low or expected to be low for things like iron ore and coal, then the future expectation for inflation will be diminished. So on and so forth. Okay? Yeah, big perm. So you know what? Yeah, there's, you know, it was funny. They had a few Rolls Royces and Bentleys and stuff, which are fine. And then there was I don't think it was a Ferrari California, but there was like a 575M or something. I'm like, gross.
All right. I want to share a unique situation with you.
So I don't know if you can see that. So this was earlier in the day where the waves were small, but then they got very big. Like the water was up against the glass, but it's flooding the rest of the hotel anyways. I guess there's not a lot to see, but you know it's interesting because it's so high. Oops. Yeah, I think you can see. I mean, there's not supposed to be waves in an infinity pool, right? So that's nothing, of course. They got way worse. This is weird. What? But you can see the edge, right? Look at the water. And then, yeah, you can kind of see the waves there, a little bit of waves. I guess it's not as good as I thought. But, you know, the interesting thing is you can hear the sound of the waves. But anyway, so later on in the day, it was like end of the world stuff. So anyways, we're on our way to our target. In here is conservative target. In here is aggressive target. So this was a second trade. Very similar to the euro dollar, very similar to the euro yen. They all were set up. This is my Aussie yen trade. Can you see it? I'll highlight it. Can you see that? So I'm long, what is it, 87.50. So it's only up 25 pips or something like that. Right on, Ryan. That's cool. Should have been in Hong Kong, man. Cool thing is I now have a secret cigar bar in Hong Kong. You would never find this place. And it's pretty awesome. All right, so we're just kind of waiting. WTI heading up, which is great. Okay. So we set this up as a roll reversal. You can see it just like the other stuff. Look at this. I already had it drawn and everything. Isn't that beautiful? Well, trying to go up. So our plan earlier in the week was to buy it. I thought maybe it'd head down to 45 and went down to like 45.80. Then higher high. So therefore it sets up the roll reversal off this area, which it did. Then it took off after the news. So then you're going to want a 618 roll reverse that, which then it did. So it's just price action on top of price action on top of price action. Yeah, Tucker. Yeah, you have your grandkids on your knees and you're like, and son, that's why you never, ever let the hitchhikers go. You got to teach them some rules, you know. Yeah, they say the difference between a redneck and a hillbilly is a redneck will kill you, but a hillbilly will keep you. Okay, so we'll see if this moves. So this is part of a longer term trend. So again, what we talked about, I think it was even just Monday, having it drop to 45, which I was off about 80 cents. And then that should go to 55. Yeah, right. I had a friend who was camping in the middle of the woods in Slovakia. Not even a campsite, just like the woods. And sitting around a small little campfire in the middle of the night. Right? And a dude stumbles into the light of the campfire from out of the forest. And he's got a giant sword in his hand. Like bigger than a machete. How do you feel in a moment like that? Yeah. And I think the guy was drunk too. Like drunk. I don't know if you've been to Eastern Europe, but drunk is a whole new level. Eastern Europeans just don't pass out, they just get drunker and meaner. So anyways, this drunk guy stumbles out of the forest into the light of the campfire, wielding a 4-foot long blade. Turns out he wants to sell them. He's been stealing railroad steel and iron, pulling up old railroads, melting them down, and making handmade swords and machetes. Yeah, nice. Say, I've known you your whole life, huh? It's just a fact. Yeah. So anyway, it's pretty funny. So let's go back to this euro, take a look. By the way, how far are we from the stock market open? 6 minutes. And then at the top of the hour, we have ISM manufacturing, right? Which isn't that big of a deal. Okay. So you see, on this one, you also had a second chance to sell the second time. So my first profit target, I think, was right at the bottom here. And then, you have a second chance there too. A little slower, but what I typically do in this situation is after you've made your first trade, drop out a step up from the 1 minute to the 5 minute. And the 5 minute guys are going to want their trade. So if you were trading the 5 minute chart, what would you have done? Okay? Something like that, maybe. I would have done it this way, but you can see someone else did it the other way. Maybe because this is the actual news candle of the ECB. But anyway, so the 5 minute guys have their, and then once the 5 minute trade is done, you're going to want to look at the 15. Okay, which means by then it'll probably be down to here, back up to here, and then down to that. So the 15 minute guys, let's say London close dudes, or might do something like this. Okay. What do you stink? Smell like a plant? So we need the stock market open, ISM manufacturing data. That should produce what we're looking for. Currently looking at USD CAD, seems like we're a pretty strong downtrend. Yeah, we just hit like, what, a 5-year low? Something like that. Seems like we're pretty strong downtrend, especially the news came in. Yes. US will probably hold on with a hike, and Canada will be looking for a hike. Sure. We call that central banking policy divergence. And the person who coined that was Mohammed Al-Aryan. Just a proper citation, right? Something I learned at school. I got my Harvard Crimson on today. Go Harvard, go Crimson. Check it out though. Matching Crimson shoes. Yeah. Go Harvard. Okay, great. So, US will probably on hold. Yes. We're at the 50 EMA, so are you talking daily? Oh, on the 1 month chart. I don't use monthly charts. I'm sorry. If we can break that, all right, maybe. All right, so let's go to that. First of all, I don't use monthly charts. The reason for that is you're only looking at technicals, and I incorporate fundamentals as well as technicals. Is that the stock market opening? Almost. Stock market's opening any minute now. So I use fundamentals as well as technicals. So if you use monthly, what you're doing is you're looking at technicals that were created from fundamentals that existed a year or two ago. And we don't live in a world similar to a year or two ago. In fact, I'm trying to figure out what's going to happen in the next 6 to 12 months. So what happened 2 years ago isn't necessarily even remotely as important. Okay, so I'm not gonna look at monthly and say monthly 55. Blah, blah, blah. No, sorry, bro, meaningless to me. Now maybe I'm wrong. It's fine. It doesn't matter if I'm wrong. I'm just telling you my opinion. So, what else is going on then? Well, what I do use, and I'll drop into an hourly for this, I do use monthly pivots. Okay? And here's the thing. That's the projected low for the month. So, we have two situations here. Sorry, got it wrong here. This is the low. Hang on. Undo. No, won't undo. Trying to get rid of the, let me just change the template then. Maybe that's easiest. Never mentions the word addiction. All right. I know it's hard to see. This down here is the projected low for the month of September. Let me zoom in here. I'll even zoom in more. So the projected low for USD CAD, see, this is all I can tell you. I don't have opinions. I'm just giving you analysis. The projected low is, I can't even read that. What is it, 22? I'd have to find my glasses. Can't even read that. What is that? I can't even see it. Gee whiz. Is that 22? Can you guys see it? 2280. I just can't even get in there enough. Is there a way to change the font size on MT4? I don't think there is there? Yeah, so about 123. Okay. And after that, I just don't know. 2290, yeah. $122.84, 122.20. So 122.22, I would say, is my aggressive target for USD CAD down. Okay. It could go farther. Okay. But that has nothing to do with me. It can go wherever it wants. I'm just telling you what the analysis tells me, that that's the aggressive projected bottom for the month. And then if it blows through that, there's something extremely fundamental going on that's more important than the technicals. But even with all of that said, with the data I have in front of me, 122.22 is the bottom for USD CAD for the month of September. Okay? What time frames do I look at? Daily, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. That's technically. Now fundamentally, I look at now, the recent past, and then 3, 6, and 12 months forward, and then sometimes 5 years forward, depending on what's going on. Yeah. So stock market should be open now? Yeah, ding, 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 ding. Good auto sales for the month, huh? Wonder how many flooded Houston cars are going to make it to eBay Motors, huh? Yosef says, Wayne, can you teach me that forward-looking thing? Well, I know you're kind of joking, but you could always go to fxbootcamp.com and sign up for the fundamentals course. It's a start. Fred says, do we rally back before lower on USD CAD? I always think that. It's always going to retrace, Fred. Always. That's why you can afford to be patient. That's why you can afford, if you see a setup and it takes off without you, you can afford to be patient. It will come back and give you a second chance because Forex loves you. Ryan, I don't know anything about cryptocurrency. Nothing. I don't know anything about it. You know? That's it. No, you just got to set up the next trade. Notice what actually happened though, guys. USD CAD fell to this level and stopped. You know what that level is? Monthly support. It's supposed to stop there.
CNBC doing a live interview with Gary Cohn, economic advisor to President Trump, reacting to the jobs number.
So, guys, if you're a bear, your job now is to identify 3 levels of resistance in which you may consider selling. But it fell to monthly support and stopped. You thought it would go farther than monthly support? Well, then that's your gamble. It's not likely to go 200 or 300%.
Not disappointed in the numbers reported today, highlighting the 3% GDP print earlier this week and the continued low unemployment rate.
But like this peso, like the forward guidance comment that Joseph asked about, we set this trade up on Monday. We had no plan. There was no plan to buy this. The plan was to wait to Friday to sell it. Okay? That's it. We had no other plan. The plan was sell it Friday. But on Monday. Cool, right? And what did we talk about before the news came out, before the dollar was weak? I said I had inside information that a $2.3 billion trade moving in favor of the Mexican peso was happening today. Therefore, you'd want to sell this pair. And I had no plan for buying it. There was no
making the case for a more competitive tax system, which in turn will allow for continued and further improvements.
That would put me long. Cool, right? Cool. But that's called a plan. That's called a strategy. That's called analysis. Well, Trucker says Japan reported very weak industrial production. You know what's more interesting is China reported quite robust industrial production capacity utilization numbers recently, 2 days ago. So maybe it points towards that. Maybe Japan's losing the game. Japan is spending most of its money on automation and robotics. They're not planning for the future very well. They're saying we're going to stay 100% Japanese until the whole island turns into senior citizens. They need to really make some changes if they're going to save that country. It's the oldest country in the world, I think, now. They need to open their borders. They need to have entrepreneurialism sponsored by the government, maybe. They need younger people. If they can't produce younger people, they should let younger people into the country. More people should speak English. It might be a threat to Japanese culture, but if Japanese culture is dead, then what's the point, right? And how about this? The CEO of Sony America makes significantly more money than the CEO of Sony Global. Because in Japan, it would be embarrassing to make so much money. But they have deflation because people don't spend money because maybe they don't have enough money. I don't know. Maybe they need some more people that are filthy, stinking rich in Japan. Yeah, Con, this is like a 3-hour webinar, if you don't mind. Brooke, you got it wrong. Brooke says, where is the pound strength coming from? So if that's not the case, Brooke, if it's not pound strength, what could it be? It would be possible dollar weakness. And that would come from the fact that NFP wasn't amazing. And that maybe Fed doesn't need to raise interest rates again this year. That would weaken the dollar. Maybe it has nothing to do with pound. So I don't know. All I know is we have a plan to sell down into here. So this is the second or third wave now on this euro dollar. Congratulations. But now we're on a monthly pivot. Be careful. Okay? This is no longer a good opportunity to sell. You should have sold way up in here. So this is too late. You would never sell at a monthly pivot. Just watching here. I'm still up 300 pips or something on the USD yen or Aussie yen, so I don't need to worry about that. CAD taking a break. You just have to ask yourself, are you going to re-short? I was hoping oil would head up. It looks like that's going to have some trouble on the short run. Okay, we've busted out here, so we got to be careful. Fib is dead. I'm going to have to mark it as a trap, so I'm going to trap this here. And I'm going to go neutral. Okay. Oh, USD yen, where would I buy USD yen? All right. So let me ask you. This is a weekly pivot. This is a weekly pivot. Are traders of the USD yen using weekly pivots, in your humble opinion? Right? Here's a weekly pivot. Here's a weekly pivot. So in this case, Piper is asking me where to buy USD yen. My answer to you would be support. So where do you see support? Okay. So you want to buy, let's say it comes back down and dips to here. You could buy here in a move like that, or you let this break to the upside. And you catch it there. Okay? Cape Town, how beautiful, huh? I need to visit. Marina's going to throw a big party. Actually, we were thinking about putting together what would you call it? Conference? No, not a conference. A training event. And the plan was to do it in Cape Town. I've just been so busy. Like I said, I've traveled 40,000 miles in 9 days just recently. You're right. But the plan was to do a special event for 1 week in a beautiful hotel and wineries and beaches and restaurants and stuff, but in a beautiful location in South Africa, in particular Cape Town. And over the course of the week, I would teach people how to start and raise money for running their own Forex fund. It wouldn't be about trading. It'd be about business planning, presentation building, elevator pitches, sales pitches, branding, that kind of stuff. Helping you, review licensing and registration type stuff and all that kind of stuff. I just haven't had time. I just thought it'd be fun. Henley looked at like helicopter trips to vineyards where we could have beautiful al fresco dinners with wine, and then 1 or 2 people maybe stand up at the end of the table and give us sales pitches on their Forex hedge fund, why we should invest, that kind of stuff. And maybe secret investors show up. I don't know.
We're 45 minutes down to U.S. trading session, 15 minutes into the U.S. trading session, and we're seeing equity futures
Brooke, I already covered that, dude. Brooke,
the
I already
opening
covered
level,
that.
we are holding on to gains of 50 points or so on the Dow, 5 handles in the S&P, and 13 handles in the NASDAQ Composite. The 10-year no future right, just off the lows of the day, down 4.5 ticks. The 30-year down more than half a point now. We've seen some selling, particularly at the long end of the curve, the reversal in bond markets following the release of the week and expected jobs report.
Pound, dollar. I covered it like 5 minutes ago. In particular to your question. So I don't know if you left. Maybe you took, but. Cool. Aussie recovering. Euro dollar's dangerous, man. This next 25 pips, I wouldn't do it. I think the first 25 pips was easy. The second 25 pips was easy. This next 25 pips, I think, is a gamble. Well, Marina, look, seriously, most people invest money because of you, of who you are. They like you. And most of the time, you're going to be in scenarios where your sales pitch is a cocktail party. Your sales pitch is a dinner. Your sales pitch is at a yacht, floating around. I had an investor many, many years ago when I was very, very young, and I had a startup, and we were out on his, I don't know if you'd call it a yacht, but it was a 38-foot tri-level cruiser. So anyways, so we're on his boat, beautiful boat. Anyways, we're out there, and he's like, how's it going? How's it going? I'm like, oh, well, I have some investors in New York. They're going to put some money in. Everything looks really great. He's like, oh, man, I like you, Wayne. I like what you're doing and stuff. I want to help you. I'm like, I don't know if there's any way you can help. He's like, well, I want to give you money. I'm telling you, I want to give you money. I'm like, oh, I thank you so much. That's really cool, but, I think we're fine. I appreciate your support. You're a nice person, but no thank you. So later in the day, once again, he sits down. He's like, come on, let me put some money in. And I'm like, no, it's okay. We don't need more investors. It's all good. And he's like, I just want to help. I just want to be involved. Just take it. Just take the money. I'm like, nah. And he's like, I'm not doing it for the return. I just want to be involved. I don't even care about the money. I just want to.
And the U.S. 10-year no future falling to a fresh low, now down 5.5 ticks.
Nice, but no, thank you. I appreciate it. And then later, I'm getting in my car, and you're right. The boat's been put away in storage and everything. I'm getting in my car, and he zooms by in his Porsche. And he gets out, and he's like, he writes me a check. It says, cash it or don't cash it. And then got in the car and left. No contract, no nothing. Cash it, don't cash it, I don't care. All right, so you're going to find yourself in these situations. I don't think most people their first investors are not going to be institutional investors. Their first investors are not going to have due diligence teams come in. So you need to be able to clearly and concisely explain what you do. When somebody just says, hey, so what do you do? Oh, I'm a currency trader. It just goes blank to some people. So how do you say it that attracts their attention? So when people ask me what I do, I say, I buy and sell money. And they smile. I'm like, everybody loves money. I love it. I'm surrounded by money all day, every day. And the cool thing about trading money is it's liquid all the time. They're like, yeah, liquid. I'm like, liquidity is important, right? Have you ever been stuck in a real estate project and you've been trying to bail out, and nobody in the right mind would buy it from you, even at a loss? Doesn't that just freak you out? Oh, that totally freaks me out. Well, that's the beautiful thing about Forex. It's completely liquid all the time. If I need to dump 100 million, it takes me 1 second. They're like, and then all of a sudden they're like, tell me more. Oh, well, but let's not talk business. We're here to party. If they don't circle back 2 hours later and ask me again, they're not interested. So anyways, you need to be trained on how to do that. And then one day there will be an actual presentation. So you got to have your PowerPoint ready, you know, all this kind of stuff, and be able to give a real concise presentation. Your documentation should be good. Your D-Doc should be good, right? Your strategy should be clearly outlined and compliant. This, that, and the other thing. It should all be, you should have a package. You should be branded. But most importantly, you should be able to speak intelligently and clearly about what you do. And then I think the way I do things is that you use your D-Doc as a way to explain risks. You have to clearly explain the risks. I usually try to spend time talking people out of investing. But right now, I'm just a college student. I'm just a peon, a nobody. Do you see the USD CAD? Well, if that's what you want to do. Okay, so if you're a bear, what did I just say earlier? If you're a bear, you need to identify 3 levels of resistance in which you would consider selling. Okay? How about a 50% Fibonacci retracement? Clearly, that's what somebody did. What else? Roll reversal down in here. That looks like a 786 to me. How about the pivot point? Seems like a 618. You can wait for the oscillator, or you can try to cut the corner here. 50% oscillator rollover on a 5. Take the shot. Put the stop above the 786 or even above this pivot, and then walk away. Check it out on Monday. Okay? But the other thing we did on this one, instead of dollar CAD, why not, I thought I had it here, but maybe not. Why not Euro CAD? Okay? You can see you've already missed it. I had this up. I don't know if you remember. I had this up. Down, 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 up, up, sell. Down, 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 up, sell. Okay? This level of support became the resistance in the future, here and here for 2 setups. The target is the green zone, in which if you're a bear, you're supposed to take profit. You could counter trend this, but I wouldn't do it. Okay, remember, and that's the aggressive target. Conservative target, aggressive target. So I do know we have covered this. Oh. Yeah. Check the time. We got about 3.5 minutes to go on the news. It's just manufacturing, so it's not that important relative to services. Take a look at the gold. Look at that, 100% retracement, huh? That feels like a lot of people got hurt. I'm going to change the template on this one. I want full-on pivot clusters. Let me zoom in. Do you think it had something to do with that monthly pivot point? Yeah. Could be a rather...
So for Greece, they're going to be selling 1 billion euro in 13-week bills on September 6th.
Thing is, can we dump the peso again?
The euro 118.69, continuing to trend lower, down 37 pips now, well off the 119.79 high. We continue to inch towards options expiration. Seeing some weakness on the euro. The dollar generally stronger. Cable against the euro, but cable is holding your session highs 129.64, up 32 pips. The dollar yen 110.13, also holding near the post jobs report high.
I'm running out of banana.
We're just a few minutes now from this data. We're going to see University of Michigan consumer sentiment reading along with the ISM August reading. ISM manufacturing expected at 56.5 versus the 56.3 previously. New orders expected at 60. University of Michigan current conditions expected at 110.9. The sentiment reading, the final reading expected at 97.5. Also get Mexico remittances and U.S. construction spending for the month of July, and that's backward-looking data expected up 0.5%.
So remember, I said 2.3, so that data is going to come out now.
1 minute to the data. We'll lead off with the ISM manufacturing. We'll follow it up with the new orders figure and the prices paid. Then we'll work our way through the final University of Michigan sentiment reading and on to construction spending. We'll follow it up with the Mexican data.
So remember, manufacturing, I think, is going to have a modest headline number, but new orders are going to be up. And that's based on the recent dollar weakness. So why wouldn't you place orders when it benefited you on the exchange rate?
Mexico remittances out a little bit early, 2.46 trillion, a little above the 2.38 billion expected. Again, 2.46 billion US dollars versus the 2.38 billion expected.
2.46. Aha. My data was old, so now we know, huh? 2.4.
In 10 seconds.
Manuel, go to tradersway.com, open an account, you can hang with me every day.
58.8 above the 56.5 expected. New orders slightly above at 60.3. Prices paid 62 in line. Final University of Michigan 96.8 below the 97.5 expected. Expectations at 87.7 also below expectations. Current conditions 110.9 in line. 1 year inflation 2.6% unchanged and 5 to 10 year 2.5% unchanged. Construction spending minus 0.6%, a miss there versus 0.5 expected. And the back month was revised lower, so some weak construction spending numbers, being that is for July. To recap, the manufacturing number 58.8 is a beat, 60.3 in new orders was largely in line with the expectations, and prices paid was also in line with expectations.
Hey, good job on that.
And that PMI was the highest reading going back to April of 2011, so a strong print there for the April,
So I think the whole thing is related to the weak dollar, like I said before the news came out. So that was, oh, did I just place a trade by accident? Shoot, I think I did. All right, so yeah. So I'm watching oil here. Looks like it's respecting the bottom. Right? Remember we said trap it, go neutral. It's respecting the bottom, which is encouraging. So we'll see if that translates into CAD strength. Let's see, gold, Aussie. What do you think, guys? Does this have anything to do with the monthly pivot point? Okay, buyers are going to buy here. Sellers are going to sell. Ooh, sellers are going to sell here. Bulls, bears, and pigs in the middle. Me too, Ryan. Wait, I thought you're a vegetarian. Vegetarian. A vegetarian. Treat, hug, and killer. That's right. All right, so we're in the last few minutes here. Any last questions? Any last currency pairs you'd like me to analyze? I'll tell you what, I know there's a delay in the chat, so ask me to cover a particular pair and I will. I'll be back in 1 minute. All right, what do we got? Peso. I think we've done all of that, guys. Haven't we? I mean, gee whiz, really? USD Peso. On USD CAD, saw fib retracement 50%. Blah, blah, blah. What else? Really? Looks like a euro downtrend started, maybe. Well, we're going to have to see, right? I mean, we just had a lot of news coming out, so a lot of maybe portfolios are changing, who knows, or adjusting, who knows, really what happens next week, where the pivots lie, how they overlap with monthly pivots, which are new today. And then we have to look at expectations for the various central banking releases. So, you know, a giant maybe, right? So what is your trade plan? So for example, with this pound, if you're a bull, you would have bought it on this retracement and lost, but probably broke even. And now if you're a bull, you're going to buy it here. It's not the greatest place in the world, but it is role reversal. And maybe now that we've gotten through all the news, maybe that's good enough. If you're a bear, and I'm assuming you sold the triple top, but if you're not a bear, triple top on the monthly central, if you're not a bear, then you're hoping for something more like that. And what actually will happen, you know as much as I do. But I think those are the two likely scenarios. If you're a bull, you buy here. If you get it, like right now, that doesn't look bullish, but you're looking at the role reversal 786, and you're at the midpoint cycle level of 129.50, but, right? So you would look for a buying opportunity here. And if you're a bear, you would sell the retracement in this role reversal. Everything else, you're just a pig. Okay? So that's a trade plan. Where it goes, you don't have control. Where you buy and sell, you do have control. Okay? So what did I do on the Mexican peso? How did I trade it? Yeah, you're a fur coat, right, Ryan? I traded the roll reversal 382 Fibonacci retracement, the same like I did on the euro dollar shorted. Picked up that scalp as well. I'm going to move my stop closer, however, take some of the risk off. Never mentions the word addiction. Okay, looking for a bounce here. Whoops, sorry. And then hopefully this holds. In certain company. Yeah, she talks to angels. A lot of pivots going on here, huh? Look at all three on the USD yen. Check that out. Weekly, monthly, weekly, and then monthly. Gorgeous, huh? I mean, weekly as resistance, weekly as support, monthly as support, weekly as support. Gorgeous! I'll have to look for some counter trend stuff on. Oh, I guess we got the holidays though. Pipper asks, do I pay as much attention to daily pivots as weekly and monthly? You know, I used to expend exclusive focus on dailies, but now in my mature years, right? I mean, look at this silver hair, right? In my mature years, I tend to scalp, not spot as much, and I tend to swing more. So I'm either like doing this, like picking up 25, 50 pips here and there, just because it's like, I don't know, it's like easy money. It's like finding a $100 bill laying on the floor. You're like, I guess I'll pick it up. So that's what scalping is. But really the money is made on the swinging. So like if I'm swinging most of the time, I don't really care about the dailies. And if I'm scalping off of a weekly or a monthly anyways. So, or psych level, or, you know, and even counter trend trading, I'm trading off weekly, monthly. So, you know, it's not that dailies aren't important. It's just, you know, I'm too old and too pretty to work that hard. Yeah, Jason's only CAD and Yen have taken off, or CAD and Aussie have taken off so far on the portfolio build. Yeah, but at least we're long on those. The sad thing is I was long 5 or 6 trades, but now I think I only have 2 trades. But whatever, 2 or 3. But yeah, you got to build them up. So, you know, now that we're through this, now we got to spend, so yeah, you got to learn when to pick them up. And hope that central bank stuff goes our way. So where's like Kiwi, for example, here? So I've been trying Kiwi for a long time, but it's just been so oversold. But to me, it feels like it might be neutral now, right? So I might buy and hope, if that makes sense, right? There's buy and hold. I might just buy and hope, you know, just hope it climbs back up. Yeah, sure is. Now, the monthly M2 down here predicts a monthly M4 up there. So September, according to my analysis, Kiwi Yen is supposed to make a high of 83 to 85. Conservatively 83, aggressively 85. But we're at 79 right now. So, you know, there's 400 or 500 pips in this. Okay. And just here's, in case you're wondering how I look at my charts, because we're neutral, okay, we haven't made a higher high, we haven't made a lower low, therefore we're neutral. I got to draw it like that, okay? So there's no trend when the market's neutral. Neutral means it's not bullish, it's not bearish, and therefore we don't need to analyze the market because there is no market. So all I have here is price, support, resistance. Now, in a sideways market, oscillators are great, so you could use the Stokes. And this last indicator, like that's Stokes. So if I'm at support, I can buy oversold. If I'm at resistance, I could sell overbought. And then this last indicator is the US dollar index. Dollar strengthening, dollar weakening, so on and so forth. Ryan says, have you ever stopped to think about how many traders' lives you have changed in all those months? Yeah, that's cool. You know, the sad thing of it, though, if you don't mind me being a realist, is 99.9% of the people don't change. They don't listen. Maybe it's fun and entertaining, but they go on doing what they want to do because it's just too hard, or they're not willing to do the work or something. I'm not sure. But I know people can do it. And that's kind of what keeps me going. And I know I've taught thousands and thousands of people. That's really cool too. And I have some good friendships because of it, which I think is exciting. And I know a few people have really grasped trading and made part of their life. But to me, it's made me a better trader to have to be in front of people every day, right? It keeps me sharp. It keeps me focused. And like even on my recent trip, traveled 40,000 miles in 9 days. I only missed 2 webinars. Traded through a class 10 hurricane. And that's not unusual for me. Out of the last, 14, 15 years of trading, I must have missed less than 10 days, I'm sure. Right? So it keeps me focused when I'm teaching someone about a 5A cross or a pivot point. I'm actually also reinforcing the things I know, but I'm reinforcing them to myself. And I'm teaching myself. And it forces me, like Marina says, most traders are inherently lazy and all that kind of stuff. But that's sort of entrepreneurs too, right? Like most entrepreneurs I know are not actually entrepreneurs. They're just out of work. So it just forces me to not relax, because I think entrepreneurs would work hard to have the easy life, but then when the easy life comes, they don't know how to be, they only know how to work hard. So I don't know. It's all this kind of stuff. Like we accept the risk because we're entrepreneurial, but the risk is the bad part. And so by me doing webinars every single day for, 1.5 decades, I can't get lazy. And it's the work that keeps me sharp. It's the work that keeps me in tune. It's the work that, that just makes me a better trader. So it's cool. And if that helps me, then by sharing, you have the same opportunities. Now, remember, I'm self-taught and I had to figure all this out. I haven't been trained by anybody. I didn't read 15 books and then spit out my own book. All of that is like, what's in my book is what I actually did, my actual life. I do some things quirky because I am self-trained, but it's the focus and discipline. Like in the beginning of today's presentation, I talked about going on a business planning retreat with myself. It was actually a several-day process, and then when that was done, I worked for like 2 or 3 weeks straight writing a business plan and pro forma cash flow statements for 3 or 4 years in advance, daily for 3 or 4 years in advance. And I think it's that work ethic, what did I call it years ago? The ridiculous, sickening work ethic. It's that stuff that I think leads to modest success, and not the pie in the sky. Let's make a lot of money really quickly. Look, I drive a Ferrari. Have you seen that stuff on YouTube? I drive a Ferrari. I made $40,000 in one day on a $2 account. What kind of nonsense is that garbage? Seriously? That's what people... And they have 300,000 views. Really? You know what it's about? It's about loving the work. So I had dinner recently with a billionaire, and he asked me, he said, hey, I heard from another group that pitched him that they have software that does all the work and it makes all the decisions and it's so smart and it does all this. And I'm like, well, why would you avoid doing the work? I was just appalled by it. Really? So someone pitched you something where they want to automate the whole thing? Like, why would you want someone to automate the process of trading your money? I love the work. I don't want to automate things. I want to download, data from central banking websites. I love pondering cause and effect. I love looking at charts. When I see a beautiful chart, I actually want to print it out and frame it and put it on the wall. I love doing the work. I want to be there. Right? So I said, you got to make a decision. Someone wants to avoid making decisions and doing the work, or someone that considers it like a passion. It's your call, bro. So I don't know. So I appreciate that, Ryan. I like what I do, and I think it comes across. And I actually do care about you guys. I want you to succeed. But at the end of the day, I'm a realist. I've been doing this long enough where 99% of people just won't make the change. They won't do it. But it doesn't stop me from trying. Well, same thing, like the new AI stuff. I'm not interested because I don't want a machine or a robot or an algorithm to make the decisions for me. I use algorithms like pivot points and stuff. But I've seen that there's enough exceptions to the rules that at best you're going to get mediocre results by full automation. So, I don't know. I like trading. So I wouldn't want to replace it with something that would do it for me. I'm like, well, it seems like the wrong focus. So yeah, Den, I'm not saying no to that, but I like what I do. So that's fine. So like, for example, I'd rather hire 10 currency traders that are patient and disciplined, that are risk averse, and consistently make a small profit. I'd rather hire 10 of those people than buy an algo. And then when they make money, we go out for dinner. To make a lot of money, now you could get your Ferrari if that's really what's important to you. Maybe it is, maybe it isn't. Okay. So that's my thought, guys. Thank you for 137 months, right? Is that, yeah, we're near the end. Thank you for 137 months of non-farm payrolls. And I'm sure it's been 150 months that I've been working with FX Street. And I still remember my first meetings with FX Street in regards to specifically non-farm payrolls. And I said, we need to pick the craziest time. And back then there was a lot of scam artists trying to sell DVDs and stuff about making money, get rich quick off non-farm payrolls. Because like I said, it used to jump 300 pips after NFP. So we agreed, FX Street and I agreed that would be the most important time where I can teach people how to be conservative and disciplined and not get rich quick type ideas. And if I can do that and have you in my webinar, then you're not out at some other stupid event with a bunch of scam artists. So it was sort of like a double whammy where the news would go and freak out, but I wouldn't freak out. And then I would teach you about managing such risks or avoiding such risks. And then I would actually kind of turn it inside out and say, well, that's crazy risky trading. Well, how could you trade more conservatively? How could you have a longer time frame outlook? What will happen later today? What will happen on Monday? How do we manage this appropriately? And that's why it was 3 hours, because it would last longer than the crazy volatility, and then I'd have an opportunity to teach you actually how you should trade. You see? So it's cool to really think about how, FX Street and I have this long history, and we want you to succeed. I mean, that's it. And Trader's Way is the same. Some brokers have a model where they know if you pop in 5,000 into a trading account, they can get you to trade it really quickly. Rah, 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 go, 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 trade, trade, trade. And they know you're most likely 95% chance you're going to blow up your trading account. And they get to keep your 5,000 bucks. They probably never even entered it into the interbanking system because they know you're going to blow up your trading account. Trader's Way is different. Their business model is to enter your trades into the interbanking system just like you asked them to. That way they never get into financial trouble. But the thing is, if I'm around and I'm teaching you how to be conservative and disciplined, maybe you'll actually slowly and slowly get better. Slowly learn patience and discipline, develop skills, slowly grow your trading account, slowly reduce your leverage, slowly increase your lot size. And over the years and years and years, they can provide quality service to you. Okay, so anyways, we care about you. We want you to succeed. But it will take blood, sweat, and tears for years, but we're here for you every single day. So peace on earth. May the pips be with you. May our profits be above average. Take care, guys.